So, should we buy or sell the cars.com stock? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. I do have a megatrend theme that I call specialized e-commerce. Here we do see that there's an average 34% here from the 52-week low, minus 58% away from the 52-week highs. So yeah, we are beating the S&P from the lows, but definitively the bears have been ferocious. Cars.com, they sell, as you might have guessed, cars. 2% here from the low, so yeah, but it's relatively performing well against its peers here, with minus 38% away from the 52-week high. So here is the company's website. Yeah, well, I gotta say I did expect the website to be a bit better. A very small logo here. It doesn't have that really like hip and fresh and online commerce look that I would guess they had. But it's a decent website. But definitively, this is a place where they can do some make some changes and improve their business. Okay, so that is the website, but it is very important because the number one way for any company to really signal who they are, what they are, that is through their website. It's a big deal. And definitively, obviously, for an e-commerce company, the website is extremely important. And if you compare, cars.com with, Tesla and other, car companies that lean heavily on the e-commerce side, then you will see that they look better. Here, as an example, this is Tesla's website. Okay, so this obviously is a very different type of company, but you can see that it's way more visual. Okay, so here is the stock chart weekly. Data points, big picture, and we can see that this stock has been through a lot. It's been through a major bear markets. Let's just measure the epic bear we had here. This was minus 90% bear market. That is very bad. But when things were very bad, you could buy here and hypothetically get 460-ish% gain. So it goes to show you that when things are peak good, they can become bad. When things are peak bad, it can become good. So the reason why this one popped onto my radar is because there's something interesting happening here on the daily data points. We do have a make or break situation. It really is that binary. So let me draw that in. We have a key horizontal support level. Support back here, 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 and this is a very big deal. So my primary assumption would be that I think the bulls will use this as an opportunity. But there's a big but. This is one of those make or break situations. The bulls cannot allow the bears to close the stock below these prior support levels. If they allow that, then that will be extremely demoralizing to the bulls, and then we can really see some major lows for this stock. So this is a very dire situation. But yes, I will lean bullish, but it's sort of like, it truly is make or break. So looking here at these other indicators, we are, at low-ish levels on the RSI and the PPO. But it's not like a screaming buy. Looking at the daily data points, it's not a screaming buy, but it's a bit of a shouting buy, I guess you can say. So let's go a bit back here. So when was this? This was in 2020. So let's go back here to 2020. So you can see that the current RSI level was formed in 2020, but you see that it took some time for that to really form a low, so it wasn't really that tradable. And when we go a bit back here, you see here that in 2018, then the RSI was very tradable. If you bought the current RSI, then you made a killing. So yeah, the key thing here for cars.com is horizontal support. In terms of giving the technicals a score here, there were mixed messages. This is a very much make or break situation, so I don't think I can give the bulls more than a 2. We are at horizontal support. If we lose it, then that is very bad. Next, we will look at seasonality. So to the right here, we simply don't have enough data to get anything from the seasonality forecaster. But to the left, over the last 5 years, we do see that the May is a very strong month. It is the second strongest month, following here November. April, the current month, is a decent month. We do close higher 60% of the time, but on average we tend to have a bit of a loss. Over the last 6 years, then we do see that April and May close higher 60% of the time, and May usually has a decent gain. So when it comes to the seasonality here, it was more bullish than bearish, but the bullishness was a bit limited. I do actually think I will use 2 here as well. Yeah, 2. Here we have the fundamentals from Saks.com, a number 3 hold, so basically like we don't know, but we do have an A value score for an e-commerce company. C growth, A momentum, so the style scores here are very good. Industry rank, internet commerce, yeah, I certainly agree. Market cap, $832 million US dollars. There's no dividend, not a huge shocker there. Let's look at what the insiders are doing. Okay, so let's look here at 2022. Buy, 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 sell, 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 buy, sell, sell, buy, sell, 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 buy. The recent moves, however, at these lower levels, they have been buys. That it is a bullish sign. So yeah, I will give this one to the bulls. So let's get cars here. Cars.com, and we will get the consensus estimates. So we do have 7 analysts here covering the stock. So this is a bit funny, right? So Google has noticed that I am looking at car websites, and now I got an ad for Land Rover. But this also shows that the AI. So Google, they do have a good AI, but it also is a bit simplistic because there is a certain context because when I have these stock and investing pages up, that's something I do habitually. So I think the AI should actually be able to filter that out as sort of noise, because when I have these kinds of tabs up, that is when I go to all kinds of company websites. So when those companies then show me ads, well, related companies show me ads, then those are not well targeted. So yeah, it's just a bit of a digression, but interesting nonetheless. Yeah, AI is way less sophisticated than people think. It's ridiculous. Like if on YouTube I watch like one video about keyboards, then all of a sudden YouTube thinks I am obsessed with keyboards. So the average price target is 666. So the devil is involved here, and we do have the highest target is 113% above. Lowest price target is 27.7% above. So yeah, both the average, high, and low price target are significantly above the current stock price. In terms of giving the fundamentals a score here, these were good fundamentals. They just were. So for from a fundamental analysis perspective, I think I will give the bulls a mighty 7 here. This is just very good fundamentals. Let's look at some correlations. So we do have 33% positive with the S&P 500. Then we have 38% here with the cars ETF, which it gives you exposure to automobiles. Yeah, I'm going to just round up 8% positive with the e-commerce ETF, I buy, then minus 15% with the dollar index. Daily data points. 38% SPY, 14% cars, minus 39% I buy, and 20% with the dollar index. Looking both long and short term, the strongest and most consistent correlation we do get is with the S&P 500, so that's interesting. So initially you might think that, well, we have to look at cars, but we have to just look at correlations, I guess. And the S&P 500 is here, so let's, yeah. So we do have a bit of a nasty chart pattern here on the S&P 500, so let me draw that in. We have a head and a shoulders pattern. That is, for all intents and purposes, bearish. Yeah, let's look at the daily data points. Yeah, we are below all kinds of moving averages. 200 daily moving average turned into resistance, beautiful shorting level. Yeah, the S&P is very vulnerable. Here is the relationship between cars and the S&P 500. So interestingly, here as well, we do have this horizontal support make or break situation. So let me draw that in. Okay, wrong color. We must have yellow. So yeah, support. It's interesting. Yeah, technically it's potentially bullish, but obviously if it becomes resistance, that is bad. Let's look at the seasonality, and we do not get seasonality. We just don't. And I'm not a fan of forcing the seasonality either, because you can change, the seasonality forecaster, but sometimes I think it's just good to sort of make a decision that if you do not have enough data about something, then you don't really have enough data to make a conclusion. So then making no conclusion is almost better than forcing a conclusion. But we did get something from some stockcharts.com. Okay, so let's look at the S&P 500 against... what is the key thing to measure it against? Let's just do the TLT out of interest. Like that. So you can see that the S&P 500 has been massively outperforming the 20-year Treasury bond ETF. So looking a bit longer term here, do we have some time cycles? Maybe. This looks a bit, yeah, this is interesting. So going way back here, rise, decline, rise, decline, rise, decline, rise, decline. So the time cycle suggests, and if you look here at this time cycle, then it nailed the high of this pair pretty well here as well. So there's reason to expect that we are going to come to a protracted period, multi-year potentially, where the S&P 500 underperforms the TLT, meaning it will be better to have positions in TLT than the S&P 500. I mean, these time cycles are pretty reliable, and they have been working for a long time. Very interesting. Let's go here to the daily data points to get some seasonality. Yeah, so the seasonality forecaster is very much bullish here for the S&P 500. I think I will give this one just super moderately to the bulls, just give them a bit of a 1. So overall, we do get a score of 3.0. So there's more reasons to be bullish than bearish, but a very key part of any kind of bullish thesis here is that horizontal support must hold. We absolutely must have bulls buying at that level, whether it is for technical, seasonality, fundamental, or relative performance reasons. Especially the fundamental, the type of investors that look at fundamentals, they have no reason not to buy at this level. Horizontal supports are actually especially interesting for the fundamental analysts because they are all about the current price as such relative to what the business metrics projects the fair value of the stock should be. So yeah, definitively a very interesting company. If they improve their website, also their logo was very boring, but I think that there's a lot of opportunities here. But it's very hard to become bullish on this stock if it manages to lose this horizontal support level. So yeah, whatever you do, of course, you want to use stops, be market neutral, and get VIP access.